Hi, welcome to the live daily analysis with Elite Currency, free for February. We're taking a look at euro dollar and pound dollar on this 21st of February. First though, please pause this video to read the entire risk disclaimer and be aware of all the risk involved when trading for exchange. Alright, first on the list is the euro dollar. Looking at the 4-hour chart at the moment, price is falling hard and price has been breaking these fib levels. We talked about the fact that price, if it breaks these fib levels, could go to the next fib, and you can see that as price stopped at this 50 fib, made a triangle. We were talking about the break to the up or downside as price was making this correction, and price broke to the downside. In fact, we talked about here the possibility for price to fall down to the 38 and 50 fib. That's what happened. This triangle could have broken to the upside, but it broke to the downside. Both breaks were interesting for technical traders because there was space to the next support or resistance. With the downside break, the main target and first target was the 61.8. Price fell there and did pause for a second, but is continuing actually to the next fib. It already reached the 78 and is very close to the 88.6 fib. So that bearish break and bearish turnout here proved out to be nicely and work out nicely. At this moment, I think that price is at a very crucial spot because price is actually testing this bottom. If this bottom breaks, then price is not going to make a bigger correction like this, a three-wave correction up to 107.25, 107.50. That is out of the window if 105.20 breaks. For me to be bearish, I need to see price basically break below 105, the round level, and 105.20, make a bear flag, break that bear flag, and I'm looking for shorts as a continuation of the downtrend. Why is that? Because price has already broken this support level like this. Price has been in a nice downtrend channel. So if it breaks this bottom, there's a possibility for an acceleration down to test the previous bottom around, and I'll put a blue line here, or that's red, excuse me. I'll make it quickly green. To test that bottom around 103.50, as you can see. All right, so break of 105, 105.20, bear flag, break of bear flag for continuation of this downtrend. In that case, this is a hook back for more downside. If price does not break this bottom, and price actually on an hourly chart shows bullish engulfing twins here, some bullish reaction, I need to see some candles here. Maybe not even hourly candle, maybe a good 4-hour candle, some good pin bar, or even a good bullish candle like this, for instance, to indicate to me that this bearishness is finally finished. Because at this moment, it's falling and falling and falling. And I don't know how far it could fall. It could continue to fall. I don't want to take longs when price is obviously in the bearish momentum. So for me, I would need to see a 4-hour, 1 hour, some candlestick patterns in this zone for me to think about taking a long with a stop loss below this bottom, below 105.20, and aiming for the minus 272 target at 107.20. If that doesn't happen, I'll stay on the sidelines and see what happens. If price just goes sideways like this, then in fact there's a good chance that price is making a correction, and there's a good chance it will break that correction to the downside for a continuation and finally break below 105.20. Or it could break above resistance and indeed still make that move up to the minus 272 target. If I add my Fibonacci sequence levels to the mix, then you can see specifically that here is the base level. This is 1, 2, 3. And for those that follow my analysis more often know that the biggest space is between 3 and 4 and 4 and 5. So there could be plenty of breakout potential left if price manages to break through the third level, hook back to it, and then go down to the fourth and potentially fifth. That's really where the most interesting space lies. So that's awaits us if we do get the break. If miraculously price does stop here, then who knows, we can get that move to the upside. Moving to the pound. Pound is in a massive contracting triangle. I am waiting for the contracting triangle to break on the 4-hour chart. I'm waiting for a 4-hour candle to post and break below the support line, the blue line, or break above the orange line and resistance line. The candle needs to be sizable, pretty big. I'm looking at probably a 40-50 pip at minimum from top to bottom, from low to high. The close needs to be near the extreme. The bearish candle has to have a close that is near low, preferably within 10%. That means that the wick at the bottom is only 10% of the candle. 20% is still okay, but preferably not more than 30%. If the wick on the bottom of the candle is more than 30% when comparing the size of the entire candle, then it's not interesting as a breakout candle. That is true for the upside too, when measuring the upside wick compared to the entire candle when looking for a bullish break. So that's what I'm doing. I'm monitoring and measuring and keep an eye on this 4-hour chart, because I think that this particular contracting triangle chart pattern is clearly visible on the 4-hour, and on the hourly it's huge. So I like to keep an eye on the chart pattern where the chart pattern is clearly visible, and not that it's so huge that I can't even see it. Then I rather zoom out and keep an eye on the 4-hour or whatever time frame that is, in this case the 4-hour. So the 4-hour is my main time frame of analyzing how and when this contracting triangle indicated by the orange and blue line breaks. If it does break to the downside, I would be looking for a small retracement of that candle or an immediate entry at that candle, and depending on the size of the candle, basically. If it's 40-50 pip candle, probably retracement happened. If it's relatively big candle, maybe like 80 pips, probably retracement will not happen, and an immediate entry is better. The target is the 61.8 fib at 122.50, 122.60, and basically that is the target for the downside. The upside target is this top at 127, and the second target is the -272 target at 129. I am looking basically for a stop loss if it's a sizable candle, a stop loss above that breakout candle, above the candle high. If it is a smaller candle, I would probably go with a stop loss above the top right here. So that is, the top itself is around 124.80. So I would go above 124.80. But if it's a sizable candle, I would just use the candle low of the breakout candle. All of that is valid for bullish breakout too. If the bullish breakout is relatively large, I would go with the stop loss below the candle low. If it's medium, I would go with the stop loss below the low. Now, how this this chart pattern breaks really could go both ways. In fact, I think that at the moment probably the bearish break seems more likely, and then a bullish bounce at the 61.8, finishing an ABC zigzag here, and then once price breaks above this resistance, I would expect a follow through of that. But it could break to the upside too. I will keep an eye on that as well. And from that perspective, this is an interesting bounce or break spot. I'm expecting to break, but price could bounce too and then break the resistance as well. So I'll keep an eye on both. For a bounce, what I would need to see, you already know what I'm looking for a bearish breakout on the 4-hour chart. For a bullish bounce, I would need to see price probably hit the 78.6 fib here. Let me adjust the fib to make it a bit more accurate. There we go. So what I would need to see is price hit the 78.6 fib and show me a hook back on the hourly, 5 to 6 candles, not breaking the initial hit at the 78.6 fib, enter line, and then not breaking that low at 124.07. Then I would think about a bounce trade up to resistance and holding it potentially for the breakout. For more free analysis this month, but also indicators, please sign up with elitecurrency.com or check out Trading Systems and click here on Live Daily Analysis. Wish you great trading and talk to you soon. Cheers.